Good morning, good people. It's your man, Investing with Cam. I'm on here today to show you guys how to close out a sell put option because I like to sell puts in order to receive that credit. So when you sell a put and or a call, you receive money for selling those options as opposed to buying options. And so as you can see here, I'm on Newsmax, which is a stock that when selling options on it, the premium is pretty high. And so you receive quite a bit of credit when selling options on Newsmax. And it's also a stock that I believe is stable, and it actually has the potential to go up in the future in the event I may be assigned any shares by selling options on Newsmax. But as you can see here, I have one contract that's open. I have an average credit of $1.35 for this contract, in which this contract consists of 100 shares. And so that's 100 times $1.35. The date I sold it on was on the 7th is when I sold this contract. And I'm going to scroll down here on to the bottom to where you can see where I received $135 for selling this put option, in which I received about $134.96 because of the fees that are associated when selling options. But I'm going to show you, like I say, how to close this out. So I would go to the trade button, and because this is a sell put, now I want to go and buy back this contract in order to close it out. And so you can see where there's a 1 here because I have one contract available. On the limit price, it says $1.25. And so when buying back an option, you typically want to try and buy it back at the asking price in order for it to go through. And it's the opposite when selling a put option. You typically want to sell it at the bid price when selling it in order for that option to be exercised. And so as you can see here, the estimated cost would be $125, meaning if I bought back this contract, I would only receive about $9 in credit. Just because I received $135 in the beginning, now I would have to pay $125 in order to buy back the contract. And so it wouldn't make sense to do this. And so I'm not going to do it. I just want to show you guys kind of the steps on how to close out a sell put option. And so my expiration date on this particular option is going to be this up and coming Friday. And so this up and coming Friday, if the price of Newsmax is still at the 24.23 here, then there's a high probability I'll close it out early and receive most of the premium. I may have to pay $4 or $5, but I still would end up on top about $130 so that I can in turn go and open up another options trade, because typically you want to try and close it out early if you're able to, and then jump into another trade for that following week. Because if I wait and let's say close it out, let it expire, receive all of the premium, and then try and open up a contract on Monday, there's a high probability I wouldn't receive as much credit because now I'm in the week of that expiration date. And I want to kind of show you guys what I mean by that as well. And so I opened up a contract yesterday on NFE, which is an energy company, which they've been around for, I would say maybe about, as far as coming into the market, so to speak, or being a company, they've been around, I think, about 7 years. In which energy is a big deal in any country, and it's just something that's a necessity. So I said, well, let me try NFE, and they seem to be pretty stable as well as far as the share price. And so as you can see here, I opened up this contract on May the 9th at the strike price is $5.50. So as long as NFE stays above the $5.50 strike price, then I'll be okay. I can let it go to expiration and I'll receive all of the credit. But if NFE, like I say, stays at the price that it's at, which is $6.33, then I would be able to close this contract out early and receive majority of my premium. And as you can see here, I sold 4 contracts at 35 cents and I received $152 in credit, which goes straight into my Robinhood account. And so what I mean by trying to close out a contract early in order to get into another contract sooner than later is, let me show you here. I'm going to go here and let's go to sell options. Well, no, I have to sell this one. I have to show you on something different. Let me go here and click on NFE. There we go. So I would go to trade and go to trade options. And so as you saw, the contract that I opened up, or the contracts that I opened up, are here at $5.50 as far as the strike price. So now if you look at the premium or the credit one would receive for opening up a contract, now it's at 30 cents. And as you had saw, I sold my contracts for 35 cents. And so you would receive, or I would receive, or whomever would receive less credit at this point. So I put 4 in because I have 4 contracts that are currently open. So if I did it, let's say now, if I was able to, I would only receive $120 in opposed to the $150 that I had received. And then as well, come Monday, that asking price, or the bid price, I should say, is going to be even lower because that expiration date is now, in a sense, only about 4 days away. So it's good to try to close out a contract early, or contracts early, and then get into another contract or other contracts sooner than later, so that you can get the maximum premium that you can receive. Because like I say, the closer you get to the expiration date, the less credit you receive for opening up that contract. And so what I'm doing also, when I receive this premium, I'm taking that money and putting it into AIPI, in which some people may take that money and go and pay bills with it, but I'm using the premium that I'm getting and investing in the AIPI so that I can get to a point where I don't have to sell options at all, or don't have to sell them as often, because AIPI pays out an extremely high dividend. And so if I can get enough shares of AIPI, then it would be enough money for me not to have to do options as often, or have to do options at all. And that's what I'm trying to get to. And as well, if I'm able to get, or once I'm able to get 500 shares of AIPI, I'm going to stop buying it and just let the dividends keep reinvesting into AIPI. And so come 10 years down the road, AIPI continues to pay out what it's paying out, because things could change. But if it continues to pay out that distribution that it's paying out, then I will basically be able to live off of the distributions from AIPI and not have to worry about having to sell options if I don't want to, and or having to work for someone. But also, once I build up those 500 shares, then I'm going to take, if I continue to run the options, I'm going to take that option money and invest in even more stable stocks like a Chevron, because I'm big on energy and I like Chevron, and I've liked Chevron for years, and it's extremely stable. And if you look at the history of a Chevron, it's only been going up. It may not go up as rapidly as an Apple or some of these other stocks, but it's consistent and it's steady, and it pays out a really good dividend, which it pays out about $1.71 per share, even though it's about $140 per share to purchase Chevron. But if you think about it, if one could build up an account of 500 grand in Chevron, then you would be making pretty decent dividends. I would say about $2,000 a month on average, if you're able to get to that point. And I know that's a lot of money, and that's thinking extremely far ahead to even be able to get to that point. But at the same time, you would be able to benefit off of the price increase of Chevron as well, because come 10 years down the road, Chevron could be trading at $300 a share. And so that's one of my favorite stocks, and there's others that I look into. But once I, like I said, build up my shares in AIPI, then I'm going to start investing in other stocks that may be more stable and more reliable in a sense, because AIPI is an ETF. I mean, the distributions could change in the future. You just don't know what could happen. And that's with any stock and or ETF, because nothing's truly promised when you're in the stock market for the most part, other than the prices are going to go up and down. That is a promise there. But I just want to show you guys that and let you guys know what I'm doing with my payouts and things like that. This is not financial advice, but if you take what I'm doing and decide to do your own thing with it, then I say the best of luck to you. But once again, it's your man Investing with Cam. Hope you guys have a great weekend, and let's make some money together. Now, I'll talk to you soon.